Hey guys, this is Market Update. In this video, we're going to look at the next 6 to 12 months for Bitcoin and crypto. What is the outlook fundamentally? What can drive us higher or lower? Because around 6 to 7 months ago, I made this outlook for this year. Some things here are a little bit off, but directionally pretty correct. So let's go ahead and see what is going to happen over the next 6 to 12 months. Because if we look back through cycles, this would be the big bull market for BTC over the next 6 to 12 months. After that, it starts to get a bit dicey again. So let's have a look at what's happened. So towards the end of last year, 2023, beginning of this year, I made this. And a few bits were wrong, but we've done pretty well. I think I made this in December 2023, the outlook for 2024. It might have been in January. But essentially, we were at, 20K then, something like that. We went all the way up to a 300% gain. We're now at a 230% gain. So a pretty good trade. But from here, what's the next 6 to 12 months? Because usually the bull market would last a lot longer. So let's have a look at what's happening for Bitcoin at the price right now. We've come off the highs. We're kind of in this stage where, a lot of selling is still going on from, Germany government. They're pretty much out of that now. You've obviously got GOX distributions, which may be a seller in the market. We are kind of just consolidating, dripping down. It's very normal price action for BTC. You can see most of the time, Bitcoin actually just kind of moves sideways to down, and then you get the re-ratings. So I don't think those re-ratings are going to come for a while, to be honest, because, that's towards the end of this year when cuts actually happen and, a lot more data comes out. So for right now, I just think we're probably going to stay in this regime of kind of sideways down, not really doing much. But look, anything under the 200-day moving average in a bull market, if you are looking to accumulate, these are the areas where you're just in dollar cost averaging, obviously waiting for those re-ratings as they come. If you do trade though, Bybit deposit bonus. If you click that link, you go and make an account and trade, make a deposit, you can get up to $30,000 as a deposit bonus. Details via the link below. The predictions, or at least outlook, that I had at the beginning of this year or the tail end of last year have kind of worked out, but a little bit wrong on some of the details. So the ETFs did happen. That was the Bitcoin ETFs. I was 90% on those. Turns out it did happen, and obviously that was great news for BTC and the price. Now, I was also absolutely convinced that the Ethereum ETFs would come, mainly because the court case, the Grayscale court case, was won, and that's why the Bitcoin ETFs had to be allowed. Right? The SEC didn't want to allow them, but eventually they were forced to via the courts. Now, the Ethereum ETFs also had to be allowed because they had the same CME futures market that Bitcoin did. So I was convinced that they were coming. Now, as we got closer to it, I was actually psyoped out of that view by market analysts who were saying, look, this thing's going to be rejected for some other reasons, but eventually it was accepted. In any case, my trade was the same all the way through. So ETH ETFs are coming, not in October, probably this or next month. So a little bit early. We obviously had the halving, which is a set date. Fed rate cuts, I also got wrong. It wasn't March to May. A little bit later, it's probably going to be September at this point. Again, a few months here and there doesn't matter. It's a direction of trade, which, I pretty much got right. And then we have obviously the election, which may be pretty bullish. Obviously, one of the candidates is saying that, they're very, very pro Bitcoin and crypto, which is obviously just generally quite good, right, for kind of adoption. But this is when the cycle usually tops out. If we look at Bitcoin cycle theory and crypto cycle theory, when Bitcoin tops out, crypto usually obviously follows. So that would be kind of the end of this year to mid next year. So that is a timeline we have to focus on because these timelines are playing out, right? We had the bear market just as always, and we're having the recovery just as always. But this would be a very, very early top in a bull market. Like if we topped here and went down again to a bear market, that is very, very unlikely. Now, of course, the price can go down because of economics short term and market sentiment, etc. But that's different than a bull market. Bull market, which is essentially the central bank becoming much easier, which we can see that's going to happen over the next 6 to 12 months. Prices look like they're going to keep deflating for a while as well. And so that's why the Fed is going to cut interest rates before they actually meet the 2% target. Everything is on a lag. And so assets are forward pricing this, but all of the data is backward looking. It's just the way it is. It's actually an opportunity for us to know how that works, and then we can make trades around that. But essentially, everything that we actually desire, like houses and energy and food, is still inflating at 4 to 5%. And so all of these metrics are ridiculous, don't make any sense. Real inflation is way higher than 3%. We know that. Look at asset prices. The things that we actually desire, like housing and investments and savings, those are going up much faster than this. That's the actual rate of inflation. In any case, these fake metrics are going to print under 2%, and they'll use that as an opportunity to cut rates, because the real game here is trying to slow this debt burden by cutting interest rates and letting the government refinance debts at the lowest possible interest rates. And then we go through another inflationary period, which would be the next bear market. So maybe 26, 27. But you can see rents here coming down. That's going to feed a lot into these fake inflation metrics that the government shows us. This is US rents down here. This is the shelter CPI, so a lot of disinflation through that as well. These metrics are actually created specifically lagging so that they can do their actual policy, which is refinancing the government, whilst all these fake metrics are lagging and showing that inflation isn't actually getting higher, but they are. You should just look at the S&P 500 to what the actual rate of inflation is, which is desirable things that we want to own, which is more like 10 to 12% a year. In any case, US CPI, you can see here, and the average of inflation outbursts over time. So potentially some more disinflation right here coming in around to the Fed's target. But all of this is nonsense. And it's a fugazi. It's like a thing that they want you to focus on, when actually this is inflation, which never goes down. It never, ever goes down. It's not beating inflation because it's gone from 10% to 2%. It went up 10%, and now it's going up again another 2%. And so it's actually just runaway inflation. Everything's getting more expensive, which is why we have to be in assets, because the assets go up as well because of the currency debasement. So the only way to protect yourself from inflation is not getting angry about anything. It's literally just playing the game and getting into assets that outperform this. The positive aspect to focus on here is that Bitcoin and crypto simply have fundamental growth over and above most other assets. So I want to split this up into two different time horizons, which I think are important. The first time horizon, if you've got an 8-year time horizon, which is 2 more cycles, let's call it 8 to 10 year, what you're looking at is an asset growing at around 50 to 80% a year annualized. So if we look at Bitcoin, if you just bought every week for the last 4 years, you've made 50 to 60% annualized return each and every year, despite buying every price. That outperforms everything else. So if you've got an 8-year time horizon, it's just how much do I want to put into this? How much am I comfortable with? How much volatility can I handle? That's the question there. Now, short term, cycle theory would tell us that within the next 12 months, that would probably be the peak of the bull market. And then you're probably looking at another bear market for BTC or some sort of drawdown. The reason being is this right here on screen, which is we're going into a cutting cycle. Now, a cutting cycle is usually pretty positive for risk assets, as you can see here. But what that will do is spark another round of inflation, or that's the worry. And so these are the worries here, which I'll go through. But these cycles are essentially government debt refinancing cycles. So they can cut rates and refinance, but it will just create more inflation that they have to tackle again with the same cycles you had this time. So that's the worry, and that's why these cycles play out. So for short term, the next 6 to 12 months, I think, look pretty decent for BTC. And I'll tell you why here. This is what happens after the Fed cuts rates for the first time, and this is back into the 80s. You can see that most of the time, after 6 to 12 months, the returns are fairly positive. You've just got 2 recessions here, the 01 and 07, which were really big, huge worldwide things, and obviously you got negative returns there. However, what happened after that, right? You can just see the S&P, the Nasdaq, right? After that, the bazooka comes out, and you got huge returns over the last generation, essentially. So again, it depends on your time horizon, right? If you're looking for 8 years, your time horizon, it doesn't matter. But the next 6 to 12 months, usually rate cuts are pretty positive for the market. Usually, if we're looking at percentages and we're trying to play those percentages here, 6 to 12 months, positive returns. Sometimes no. So you have to keep that in mind. But Fed rate cuts are pretty positive for the market. And if the market is positive, S&P, Nasdaq, I think Bitcoin and crypto generally are going to be pretty positive as well, even though they're not correlated. The risk is some sort of wider depression that's kicked off by this rate hiking cycle. And that's always in the back of your mind. So here's the positive and negative for the next 6 to 12 months. Because in 12 months' time, what this Fed cutting cycle may do, if they buy more government debt or let the government refinance at low rates, is eventually those rates may be a bit too easy and they'll spark off inflation again. So 26 or 20 end of 25, 6, 7, could be a rate hiking cycle again, and they want to draw things down again, which is bearish for risk assets. So the next 6 to 12 months are important. Inflation is at or near target right now and coming down, and so the reaction will be more easing and stimulus potentially. Slightly weaker dollar is pretty good for world tensions if that happens, and I think they kind of want a slightly weaker dollar, to be honest, so that they can actually try and figure out their trade balance, because they are running huge trade deficits, and that's not really great for them. So maybe a weaker dollar is necessary and actually pretty good for trade policy. Cuts are necessary. Cuts are absolutely necessary. I'll tell you why cuts are necessary is because this debt burden is utterly unpayable and is literally running away from them, and they need lower rates to refinance this to stop this happening. So that's an issue. They never let prices fall. They always stimulate, and that's why this slowdown in the economy means stimulus or a reaction, which means higher asset prices. The ETH ETFs are coming. These are absolutely nailed on, and so that's new capital over time, despite there might be some selling and everything. That doesn't matter. They're net positive for the industry. Goldman Sachs, you can see here, they plan to launch some tokenized funds this year. So now you've got all the big guys in, right? Goldman Sachs, JP Morgan, BlackRock. JP Morgan have their own blockchain, which is called Onyx, which is an EVM copy-paste. That could become a layer 2 on Ethereum. I think that's what we're seeing, right? Is that most of the big banks are using Ethereum. So, it's pretty robust for that network. And then the new US admin, if it comes in, they're very pro Bitcoin and generally crypto. So I think that would just be generally, these are the fundamental drivers. Now, the short term is that the Fed may already have tightened too much that it brings that much larger slowdown. So that's the uncertainty, is that if you get a massive recession, right, then you actually get negative returns. I don't think they're going to let it happen that much though. And they've already been plugging holes in the banking industry with the bank term funding program and the discount window. And so you can see that, the banking system is not going to let it go bust like it did in these recessions. So I think I'm more leaning towards, pretty much decent returns and not these kind of big financial crises. But obviously anything can happen, so we have to be reticent of it. Cuts lead to inflation again, which is 100% guaranteed. And that's the next bear market. But I don't think that's going to happen anytime soon, right? Because we're in that phase where you're actually getting these disinflationary forces in these fake government metrics that come out. So we're in a sweet spot for right now, but things could go wrong. You can see them here. Unknown geopolitics. Market could throw a tantrum short term if unemployment spikes unexpectedly, if you get a huge miss in inflation or GDP or something, and everyone says, oh, the market's crashing, and market goes down 20%, Bitcoin goes down 50%. That could happen. But again, I just think that the reaction to that is more debt, more stimulus, which ultimately just inflates the pie even more, and then assets go up. So generally, I'm pretty positive over the short term, over the next 6 to 12 months. But that's the bull market, and the bull market usually finishes then. So we have to be careful if you're looking to sell out or trade or something. You have to be aware of that. But again, 8 years, you're in an industry that just has more fundamental growth than most other assets. I have updated the crypto course with more research like this. If you're a course member, those are free for you, so go and watch them if you haven't. I'll be putting the price up at the end of this month because of that new content, but I'll leave it at the original price for the next 2 weeks or so. Bybit deposit bonus down in the description if you trade crypto as well. I'm James, it's MoneyGG. Cheers for watching, and I'll see you in the next one.